We begin tonight with jobs. The labor market hasn't looked this good in a decade. Job growth recovered in April after a lousy March, and most agree that the economy is getting very close to full employment. Employers added 211,000 positions last month, more than expected. The unemployment rate dropped to 4.4%, which is a 10-year low. A broader measure of unemployment that includes discouraged and part-time workers also fell. And although wages grew compared to a year ago, the Federal Reserve wants them to pick up even more. Hampton Pearson reports tonight on America's employment picture.
The April rebound in hiring was dramatic. From just 79,000 jobs in March, more than doubling to 211,000 workers added to payrolls last month. At 4.4%, the unemployment rate is the lowest in a decade.
The real story here is the tightness in the labor markets. Didn't really show up this month in the year-over-year figures. As I said, the base effects are pretty strong there. But the Fed's going to pay attention here.
There are still more than 5.5 million job openings nationwide, with a shortage in many skilled professions triggering competition and higher wages and a mini boom for job recruiters. The Porter Group, headquartered in Columbia, Maryland, specializes in business-to-business sales and services with corporate clients from New York City to the Washington, D.C. area. A spike in business in recent months now has the firm getting 2,400 new applicants per month. The median salary and benefits for those who get placed around $85,000 a year.
It's really a war for talent, if you will, going on right now. And people, at least from what we're seeing, a lot of people are getting more money even than what they're really qualified for.
But the lion's share of workers are still dealing with stagnant wages, up just 2.5% year over year to around $26 an hour, according to the Labor Department. In April, hiring was strongest in lower-paying industries, restaurants and hotels, which added 55,000 new workers. Healthcare was second, with 37,000 workers and a wider range of salaries. Leading economists say the wages versus inflation debate will be back on the table for monetary policymakers.
Everybody's emphasizing that the Fed's going up in rates, which of course they are, but they're going very slowly. There's no panic. There's no sense we have to clang the bells because inflation is on the horizon.
I think it's very likely that they go in June. I also expect a hike in September. And then in the fourth quarter, I'm looking for a start to balance sheet adjustment or an announcement.
This week, monetary policymakers said sluggish first quarter economic growth was likely transitory. Today's hiring rebound backs up that claim. For Nightly Business Report, I'm Hampton Pearson in Washington.